Welcome to this session of 2 hours. Now in this session our discussion will be continuing on topic of salaries. Okay, so check. Question number 3, illustration 3 in the same PDF, illustration 3 which is dedicated to medical benefits. Okay, which is dedicated to medical benefits. Miss Rakhi is an employee in a private company. She receives following medical benefits from the company during PY 23-24. Reimbursement of following medical expenses incurred by Miss Rakhi. So we are talking about reimbursement of medical expense. So you will tell me what is taxable, what is exempted, or you can say not taxable. 1. On treatment of a self-employed daughter in a private clinic. Taxable. Please tax 4,000. Why? Simple reason, because it is in the private clinic, it will become taxable. On treatment of herself by family doctor, taxable, because any medical expenses reimbursed will be always fully taxable if treatment is in India. If treatment is outside India, there is possibility of some amount as being not taxed. Let's see next. On treatment of her mother-in-law dependent on her in nursing home, taxable. Payment of premium of medical policy. So what happens with health insurance premium or medical insurance premium? It's a tax free perquisite. Medical allowance, fully taxable. Please tax 2000 into 12. Next, medical expense reimbursed on her son's treatment in government hospital, tax free perquisite. Expenses incurred by company on treatment of her minor son abroad. Abroad. It is not taxable to the extent amount allowed by RBI. Expenses in relation to stay of Rakhi and the minor son abroad. So this was medical treatment. This is stay for that medical treatment. 1,20,000. This is again abroad. Okay. Limit prescribed by RBI for this is 2 lakhs. Discuss about taxability of above benefits and allowances in hands of Rakhi. Question is discuss, means you have to write of course, but you should not make a statement, it's okay. You can just comment on each. Okay, so see, reimbursement of medical expense was fully taxable. 4,000 plus 8,000, 5,000, this 4,000 plus 8,000 plus 5,000. Next, policy is not taxable. Then medical allowance is fully taxable. Then government hospital treatment is not taxable. Expense incurred by company on treatment of minors and abroad, not taxable. And Rakhi for treatment, stay expense, not taxable. Clear? Understood? We do the solution. We are assuming that this both are within the limit. So give the heading taxability of medical benefits and allowances in hands of Miss Rakhi for AY 24-25. Taxability of medical benefits and allowances in hands of Rakhi for AY 24-25 in bracket relevant to PY 23-24. Relevant to PY 23-24. Okay, first point, reimbursement of medical expenses, fully taxable. Take all the three figures, show them. 4,000 plus 8,000 plus 5,000. So it is 17,000 on the extreme right hand side. Next, payment of premium on medical policy taken on health of Rakhi. Payment of premium on mediclaim policy taken on health of Rakhi. You know it is a tax free perquisite. It is a tax free perquisite. So dash. All of you. Third, medical allowance. Why it is fully taxable? Because it is personal allowance and not covered by section 10. So it's fully taxable. 2000 per month into 12 months. Are you all getting 24,000? Next, medical expenses reimbursed on her son's treatment in a government hospital. Medical expenses reimbursed on son's treatment in government hospital. Not taxable being, why it is not taxable? Being treatment in government hospital. Not taxable being treatment in government hospital. Not taxable being treatment in government hospital. Next, expense incurred by company on treatment of a minor son abroad. Okay, in bracket, not taxable assuming it is within limits allowed by RBI. Not taxable, for fifth point you will say not taxable assuming it is within limits allowed by Reserve Bank of India. For fifth point, not taxable assuming that it is within limits allowed by Reserve Bank of India. And lastly, expenses in relation to stay of Rakhi means employee, and her minor son abroad for medical treatment. Not taxable, as it is within limit allowed by RBI. Not taxable, as it is within limit allowed by RBI. Not taxable, as it is within limit allowed by Reserve Bank of India. No need to take total of all perquisites because question was saying discuss. Have you all followed? Did you understand? Did you follow? Shall we go ahead? Done? Now going to PF. Just keeping one thing pending, valuation of one perquisite accommodation. So just keeping that point pending. Why you will understand later. Now going to PF's part, Provident Fund. Okay, you know now because initially we had done that bifurcation. Whole salaries was bifurcated in monetary benefits, allowances, perquisites, PFs, retirement benefits. So I can pick up anything and start discussing because you know which part we are discussing. Now we are discussing PF part, provident fund. What is meaning of fund, by the way? Fund. Fund means what? Fund means pool of funds. Fund means corpus. Fund means what? Pool of funds. Some funds put together. So here we are talking about provident fund. What is meaning of provident fund? Provident fund means fund kept for future of employees. Fund which is created for future of employees. For better future of employee. So when he retires, he can take this fund amount and maybe, you know, start his business or whatever he wants to do, he can do with this fund. So fund is a corpus. So this corpus is prepared for future of better future of that employee after he retires. In this fund, in this fund, there are few elements. See, who contributes money? From in this fund, from where will money be deposited? Employer will deposit. So employer is depositing for whose benefit? Employees benefit. So friends, this is an income for employee because any benefit for employee is an income. So this is income for employee. Who else contributes? Employee himself contributes. Tell me, from where will employee contribute? Exactly. So already from his income he contributes. So it is not additional income. From his income he contributes. You got my point? If I am getting 50,000 rupees, from my 50,000 I am keeping aside 5,000. So this is not fresh income. This is an application of income. So many students get confused here only and keep on asking me irrelevant doubts afterwards. See, employees contribution, is it income? Employees contribution is not income. Employees contribution actually is a saving. For employee it is a saving. If I get 10 lakh rupees from my company, from my employer, if I get 10 lakh rupees and I do FD of 2 lakh, will you ask me whether 2 lakh is income? No, 2 lakh is actually my investment from 10 lakhs. Same way, this is my contribution, but not in FD, but in PF. So this is investment for future. And employer's contribution is my income. Because I was getting 50,000 from my employer, plus my employer was contributing 10,000 on my behalf to the PF. Means my benefit is not only 50, my benefit is 50 plus 10. That is the difference. And on this fund, interest will keep on getting credited. Why I am saying using the word credited and not received? Because I may not be interested in withdrawing this interest amount. That interest will keep on getting credited. And I will withdraw that whole amount when I retire. So I am talking about three things in PF. One is employer's contribution, one is employee's contribution, third is interest. Out of these things, you must have observed employer's contribution and interest is my fresh income. So for that, we have to discuss exemption. For income, there may be exemption. But what I am paying from my pocket, that may attract deduction. May attract, may not attract. What word I am using? May. That may attract deduction. And finally, on retirement or at the time of quitting the job, I will receive the amount on maturity. This amount may become my, everywhere I am putting question mark because I have to see what exactly is treatment of each of this point in tax. But before that, I am trying to understand this concept. So PF is which PF? It could be statutory PF. Statutory PF means maintained by government. So mostly government employees, public sector companies will have account with SPF. SPF means statutory provident fund. There could be UPF. UPF means 100% what you can say private. There is no recognition to that. It is just a bank account opened. It is not a PF which is recognized. So it is called as UPF. And the mid level is what? Mid level is RPF. RPF means what? It is not government's PF. It is not SPF. It is a private PF, but it has got recognition by commissioner of income tax. Means Infosys company has lakhs of employee. So Infosys will open their own PF and get it recognized by commissioner of income tax because they will follow all the norms. That is called as RPF. So looking at this, which do you think is the best PF? Which will get lot of tax benefits? Which of these three do you think will get highest tax benefits? Very good answer. Needless to say, SPF because it is government. And which will get least tax benefits? UPF because it is not even recognized. And mid-level benefits? Mid-level benefits? RPF. So SPF best, UPF worst, mid-level RPF. You'll understand what I'm saying. As we go ahead, you will realize what I'm saying. So, believe me or not, you have to do 12 things. What 12 things? Employees' contribution under SPF, RPF, UPF. Employees' contribution under SPF, RPF, UPF. Interest received means interest credited under SPF, RPF, UPF. Amount received on maturity under SPF, RPF, UPF. So 3 PFs and 4 instances in tax means 4 consequences in tax. So 3 into 4. You have to learn about 12 things. Got it? How many things you have to learn about? 12. But very simple and important. We will make one chart and learn about it. But before that, I give you 5 minutes. Explain yourself on the fresh page in Provisions and Concepts book. Explain yourself concept of PF and types of PF. Concept of PF and types of PF. Don't be shy. Explain yourself concept of PF and what types of PF. So PF, first make 3 branches in PF. It can be SPF, RPF, UPF. And why I have drawn this circle? That circle shows fund, pool of fund. In that pool of fund, from where is the money going? Money is going from employer's contribution. Each month employer contributes. This is one of the advantage of being in employment. Automatic saving. Which self-employed person may not do on disciplined basis. But employee has no option. PF keeps on happening. So employer's contribution. Then employees contribution. From outside they are going in this circle. From outside this amount is going in the fund. And within that circle interest is getting credited. So all these 3 figures together will form the fund. Fund means what? Pool of money. If I put one basket here, and if I take money from you and put it in that basket, then that is a fund. Like mutual fund. I'm just trying to explain you fund concept. So for employers contribution, that is an income, employees contribution is an investment, interest credited is income, and again amount received on maturity may be income to some extent. Incomes may attract dash. Incomes may attract exemptions. Incomes may attract exemptions. Investment may attract deductions. So from that aspect, we have to learn in the subject of taxation. Have you all completed? Have you all understood? Okay, so now listen. Treatment of PF. First understand this. What is happening? What is the heading? Treatment of PF or PFs, Provident Funds. What columns I have made? Particulars, SPF, RPF, UPF. From students' understanding perspective, I have written best above what? SPF and worst above what? UPF. Why SPF is best I am saying? Employer's contribution fully exempt. Fully exempt. So it is income but not forming part of total income. Fully exempt. Let it be, let you be calculating under 115 BSc also. Fully exempt. Employees contribution allowed as deduction under 80C. Allowed as deduction under 80C. 80C means where is the position of 80C? Where is the position of 80C? GTI. GTI means gross total income minus 80C to 80U. Deductions of chapter 6A. Interest, congratulations, fully exempt. Amount received on maturity, fully exempt. So how is the scheme? Best. Everything gets exempt. And amount which you contribute gets deducted. What else you want in life? So SPF is the best PF. Worst is which? UPF. Why it is worst? Employer's contribution exempt, no problem, enjoy. Still I am calling it worst. Employees contribution no deduction. Interest credited exempt. Still I am calling it worst. Because when you receive the amount, after 10 years, 20 years, you will receive big amount. That whole amount will become taxable. So dangerous. It was better if you would have taxed every year. You're not taxing every year. You're making it a huge amount. How will you feel that you will see in your UPF 30 lakh rupees? But when you withdraw that, when 30 lakhs comes in your bank account, then out of that 30 lakh, if you have to pay tax of 8 lakh, then what will be your feeling? Worst. That's why worst. Best is SPF. If in place of UPF it was SPF, 30 lakhs withdrawn in your bank, you enjoy full 30 lakhs. And then comes mid level, which is RPF. In RPF, employer's contribution will be exempt, but how much? It will be exempt, but how much? Remember, how much? Only 12% of salary. Limited will be exempt. So if employer contributes up to 12%, no problem. But if he contributes in excess of 12%, that excess will get taxed. You should ask me one question. What is definition of salary? So definition of salary here is same like that for HRA. So for HRA exemption, what is definition of salary? Basic plus DA terms of employment plus commission percentage of sales. That's it. That is salary. Simple. Employees contribution. What happens with employees contribution? Congratulations. Allowed as deduction under ATC. Interest credited. Exempt. But how much? 9.5% of principal. Not salary. 9.5% of unsaid it is principal. So if you are getting at 12, 2.5 will become taxed. I'll explain you how. And amount received on maturity will be exempt but on some satisfaction of some conditions. So I'm calling RPF as somewhere between SPF and UPF. Then salaries definition and 9.5%, how to work out that 9.5%. If at 15%, for example, you have received at 15% you have received 20,000 example, then how much you would have received at 9.5? So doing cross multiplication. Clear? So please complete this. Take your time. Complete this. I will keep quiet. I will try to keep quiet. Treatment of PF in your provisions and concepts book. Particulars SPF, RPF, UPF. I would tell you do fund by fund. Do fund by fund. Do fund by fund means first complete for SPF, then complete for RPF, then complete for UPF. But now I will not speak. Give these indications properly. All those watching recording are also doing it, I hope. I think you are done. So please write down definition of salary for exemption of RPF. It is same like HRA, basic plus DA terms of employment slash forming part of retirement benefits and plus commission which is as per percentage of sales. Clear all of you? Shall I go ahead? And what is the significance of 9.5%? Show that by way of example, show that in my example, interest credited at 15% is 20,000. In my example, interest credited at 15% is 20,000. So how much would be exempt? So exempt at 9.5% will be how much? So show the working. 20,000 into 9.5 divided by 15. So exempt would be 12,667 in my example. Hope all of you have written salaries definition. If you have not written, still easy. Same like HRA. So copy it from HRA. Basic plus DATOE slash RB plus commission percentage of sales. All of you done? Now we have discussed one thing. UPF amount received on maturity is fully taxable. See this. I told you the worst. But still we should see UPF received on maturity. Means what exactly will you receive? A huge amount. That huge amount will consist of what? Principal plus interest. Principal plus interest. Don't forget that principal will have two parts. Can you guess what two parts? Employer's contribution and employee's contribution. And interest will have two parts. Interest on employer's contribution and interest on employee's contribution. So see, UPF amount received on maturity will have these two parts. Principal and what? Interest. Friends, if you observe, you have enjoyed each year employer's contribution used to be exempt in UPF. Did you see? In UPF, each year, here, in UPF, each year employer's contribution used to be exempt. Each year interest used to be what? Exempt. So you have enjoyed a lot earlier, not paying any tax. Now pay all the tax. So principal will have employer's contribution that will be taxed under the head salaries. Interest on employer's contribution taxed under the head salaries. But interest on your own contribution, interest on your own contribution means employee's contribution will be taxed, but under the head income from other sources, because this provident fund is not recognized. It has got no relevance. So it's like your own money you had kept aside. On that you are getting interest. And you will get your own money back. In principle there are two parts. One is employer's contribution, one is employee means you own. Your own money you have got back. Own money which you have kept aside you have got back. That is not an income. So that is not taxable. See, I will tell you one thing. If I have done FD of 5 lakh, how did I do the FD? From my income. Afterwards, if I get 5 lakh 25,000, what is my income? You got my point. I did a FD of 5 lakh. So answering this, I did a FD of 5 lakh. And afterwards, I got 5 lakh 25,000 back. What is my income? Exactly only 25,000, not 5 lakhs. My own money I am getting back is not an income. So what is this? Employee's contribution received on maturity. What is this? My own income. So my own income is not taxable. But employer's contribution is a fresh income which was earlier exempt. So now it gets taxed. Interest on employer's contribution gets taxed under salary. But interest on employee's contribution gets taxed under IFOS. This is what will happen for UPF amount received on maturity. So please show this. I request you to do this in your provisions and concepts book. Now I will not speak a word unless you have doubt. 2 minutes I am maintaining silence for you to complete this. Please do it. Show this hashtag UPF amount received on maturity so that you will receive principal amount, you will receive interest amount. Show principal will have two parts, employer's contribution, employee's contribution. Show that interest has two parts. Bus, now I'll keep quiet. Done, na? See the example now. Still doing? See the example based on this. I would suggest you to go to example based on this. What is the example saying? Basic salary is 45,000 per month. DA is 25,000 per month. But out of DA, 50% is as per terms of employment. Employer's contribution to PF is 12,000 per month. I am not telling you which PF because I will expect you to do it under all three situations. If it is SPF, if it is RPF, if it is UPF. So that in one data set, we can do three questions, three possibilities. Employee's contribution is equal to employer's contribution. Interest credited to PF is at 12%. He has opted out of 115 BSc, that is, he is paying tax as per regular provisions. Effect of that is you will get deduction of 80C, otherwise no change. 80C deduction is not allowed if you go for 115 BAC. Compute total income assuming the PF is SPF, RPF, UPF. Okay. If possible, take screenshot of this. You take photo of this. Complete this question afterwards. We will focus on solution. But complete it. Leave space and complete it. Leave space and complete it for sure in your problems book. Clear? Which PF it is? All three. So what will you do? While working particulars, SPF, RPF, UPF. For basic, no problem. Taxable everywhere. D also taxable everywhere. Let's start doing it. We'll understand step by step. Give the heading. I will guide you. Give the heading. Computation of total income of Mr. X for AY 24-25 relevant to PY 23-24. Figures in rupees. Computation of total income of Mr. X for AY 24-25 relevant to PY 23-24. Particulars SPF, RPF, UPF. Please in this sequence only. SPF, RPF, UPF. Done. What is the first? Nicely give the heading. I'm waiting for you. Then nicely make the columns. Particulars SPF, RPF, UPF. See, you have to compute total income, means taxable income. So write first head, income from salary. Income from salary. If you have taken photo of the question slash screenshot, tell me what's your basic salary. What is your basic salary? 45,000 per month. So 45,000 into 12. So of course, taxable, fully taxable in all three columns. Are you getting 5,40,000 each? After that, please go to DA. DA is how much? Is it given in the question? What is the DA amount? So 25,000 into 12. Because don't consider how much is terms of employment right now. While taxing, you should tax the full figure. So are you all getting 3 lakhs in all columns? Are you getting 3 lakhs in all columns? Employer's contribution to PF. Now friends, you know it is fully exempt for SPF and fully exempt for UPF. Leave RPF column blank. You will leave it blank. All of you, it's my request. Leave it blank. You will do it by way of note. Assume you don't know the figure now. Next, what is next? Interest credited to PF. You know fully exempt in SPF and fully exempt in UPF. So dash dash in SPF and UPF. Note 2 in RPF. Please put it blank. Leave it blank. If you really want to succeed in life, leave it blank. Go in proper fashion. So, going ahead, therefore, gross taxable salary. Leave blank for RPF, of course. For SPF, UPF, everything is accomplished. You can take. If you really want to be successful, take on your calci the figures of SPF and UPF. 5 lakh 40,000 plus 3 lakh. That's it. 8 lakh 40,000 is your gross taxable what? Salary. Don't forget, you will get deductions of section 16. Standard deduction. There is no PT. There is no entertainment allowance. So only standard deduction in all three cases 50,000. Friends, take NTS. Which column you will leave blank in NTS? Of course, RPF column you will leave blank. SPF, UPF you have accomplished. Are you all getting NTS of 7,90,000? And dash right now? Nothing. And in UPF? Of course, 7,90,000. Is it absolutely clear till this point? Add income from other heads. You don't have other heads. You don't have HP, PGBP, capital gain, IFOS. You don't have. So dash dash dash. In all three columns dash dash dash. Therefore, GTI. GTI means gross total income. You can take GTI only in the case of SPF column and UPF column. It is same. 7,90,000 and 7,90,000. Do you agree with me? Do you accept it? Shall we go ahead? Now comes less deduction under section 80C. 8080, capital C, not A for apple, T for tiger. Numerical 80, capital C. So it is for employees the contribution to PF. May I know what is employees the contribution to PF? It is same like employers contribution. So what is employers contribution to PF? 12,000 per month into 12. Please take 144 each in SPF and RPF. In UPF, no such facility of deduction. So now friends, you can get total income in case of SPF and UPF. May I know what is total income in SPF? Is it 6,46,000? And in UPF it continues to be 7,90,000. So I had promised you na UPF is worst. See how much income is exposed to tax in UPF. See how much income is exposed to tax in UPF. 7,90,000. And how much is exposed to tax in SPF? Exactly. So see SPF is so best. Now all working focused on all of you. Now working is focused on RPF. Shall we focus our working on recognized provident fund now? With your permission, can I go to RPF? Note 1 will be taxable amount of employer's contribution to RPF. Very, very simple. Taxable amount of employer's contribution to RPF. I can directly find out taxable figure here of employer's contribution to RPF. What will be taxable? Total received minus exempt. Received means what is employer contributing to RPF? What amount is contributing to RPF? 12,000, no? So he's contributing 12,000 into 12, 144. And how much is exempt? Dash percent of salary. Say loudly, how much is exempt? 12% of salary. What is definition of salary? Basic plus DA terms of employment. Basic plus DA terms of employment plus commission percentage of sales. There is no commission, but there is basic, of course. Basic is 540, you know that. DA, you know, is 3 lakh, but terms of employment is 50%. So 3 lakhs into 50%. So please calculate your salary. Think and do, think and do. 5,40,000 plus 1,50,000 will be your salary. Check whether your salary is 690. If 690, tell me. If it is 6,90,000, let me know. Is it exempt 12% of that 690? What is 12% of 690? 80 to 800. Exempt 80 to 800 from 1,44,000. 61,200 will become taxable. Tell me honestly, did you get 61 200 as taxable? Tell me very honestly. Shall we go ahead? You tell me interest you have got at what percentage on PF? You have got at what percent? In the sum you have got at what percent? 12%. At 12% how much you have got? Then just see in the sum and tell me. My expectation is very less from you all. At 12% how much you have got? 1 lakh? Just see the sum and tell me bus. At 12% you have got 1 lakh 50,000. Exempt will be at 9.5%. So how will you do? 1 lakh 50,000 into 9.5 upon 12. So tell me how much is the exemption amount? 1 lakh 1 lakh, check, 1 lakh 18,750 is exempt. Balance will become taxable. Please do it. Note to, do it honestly, note to, very honestly. Tell me once you get 31 250. Don't tell me. Take those figures respectively. You know where to take the figures. You have already cleared your foundation. They can afford to give exemption only of 9.5%. So excess of that, whatever you have paid, will become taxable. So 31 250 is becoming taxable. If that is done, both the figures you will take in your main working. In your main working, in RPF column, take taxable employer's contribution 61 200 and this 31 250. Please take. Have you completed this? Please take it here. 61 200 employer's contribution to RPF and 31 250 interest credited to RPF. And please calculate GTS in RPF and check whether you are getting GTS as 930 to 450 and eventually calculate NTS and eventually calculate GTI and eventually calculate what? Total income and check whether you are getting these figures. Observe, please observe and tell me whether you are getting these figures. Now observe, highest taxable is in which case? UPF. Least taxable is in which case? SPF. And mid level? RPF. Understood? Why I said best is SPF, worst is UPF. Clear? Next. Next also please take photo. Compulsory homework of copying this question. Next example, be my volunteer, take photo, take screenshot, those who are watching. Acha, if you are watching on the app, don't take screenshot. App will get hang. So pause the video and complete writing the question. Your app also gets hang if you take screenshot. If you are watching on YouTube, you can take screenshot. Okay. Now see what is happening in this question. Amount is received on maturity of UPF. How much? Can you blindly tax full 25 lakhs? Can you blindly tax full 25 lakhs? Yes, no? Is it such a difficult question? My simple step by step I am asking the questions. So answer, can I blindly tax full 25 lakhs? No, I have to bifurcate between what is received towards principal, what is received towards interest. So there are four elements. One, employer's contribution. Out of 25 lakhs, how much is employer's contribution? Under which head it will be taxed? Salary. I hope you are getting what is the situation. My employer kept on putting money in UPF. When he was putting money in UPF on year to year basis, it was exempt. Now when I am getting it back, that money, it will become taxable under the head salary. Employee's contribution. My own money, I am getting back, not taxable. So when employer was putting every month money, I was also putting. But I was putting out of my taxed taxed income already. So my own hard-earned money I am putting, which I am getting back. No tax. What else I am getting? Interest on employer's contribution. Which head? Then taxable under which head? Salary. And interest on employees the contribution. IFOS. That's it. Do the solution. Don't be shy. Go ahead. Complete the solution. Leave some space for the question. As a good student, complete the question at home. And right now, do the solution. Right there, amount taxable under the head salaries. Amount taxable under the head salaries. When you are coming to class tomorrow, do the homework. Secondly, read each and every provision in your provisions and concepts book. Every day keep on reading. Every day wake up 20 minutes early, read it and come. If you are coming in bus, while coming in bus, read it. There is no other option. This is foreign language. And foreign language grammar you are learning. At such a age where you can't learn new language naturally. So you have to train yourself. So many things we have done since morning today. Allowances, perquisites, PF, and such 200 more things we have to do minimum throughout the batch. And GST, because GST was 50 marks. This is 50. Now everything you have to do one day before exam. So you can't study one day before exam. You have to chill one day before exam. Your studies should be done beforehand. Go ahead. Salaries should be 12 lakh 50,000. Means it's taxable under the head salaries. And then under IFRS, 5 lakh. I hope it was done. Under IFRS, 5 lakh. And note will be for what point? That employees' contribution received back from UPF on maturity is not taxable. That will be the note. Complete it. Is it done? Friends, is it done for all of you? Shall we go ahead? Let's do one part, that is, let's start with retirement benefits. Let's do at least 1 2 retirement benefits and then stop for today. So give the heading, fresh page, retirement benefits. On fresh page, give the heading, retirement benefits. Let's do pension first. Pension. What we are doing first? Don't take tension. We are doing first pension. So do the pension first. Pension. Understand what is pension? When you retire, you get money on month to month basis from your employer. That is called as pension. Simple. If you keep on getting money on month to month basis, that is called as pension, and more importantly, that is called as uncommuted pension. What it is called? हाँ, committed नहीं, commuted. Uncommuted. Uncommuted pension. Uncommuted pension means that pension which you get on per month basis. Very simple. This per month pension which you get is always fully taxable. Don't even consider who you are. You are government employee, non-government employee, doesn't matter. It is always fully taxable. Under which head? Of course, the head which we are doing, that is salary. Agreed. You are no longer employed with that company. But why you are getting the pension? Because you are former employee of that company. So there exists a relation of employer employee. Employer includes former employer also. So it will become fully taxable under the head salary. From this you can take standard deduction also. of 50,000 rupees. Clear? That is your uncommuted pension. Life is going good if it is only uncommuted pension. But few people pay attention to this concept. But few people want pension in lump sum. Means what? I will keep on getting 15,000 per month throughout my life. I don't want that. I want today money, lump sum, to start my own business or to do anything, whatever it is. For marriage in my house, for construction of house, whatever. So what I will do, I will get the pension commuted. That is called as commuted pension. I will get the pension lump sum. That is called as. So what will I do with the pension? I will commute the pension. Commute means what? Take the pension on what basis? Lump sum basis. Problem starts here. Uncommuted was always fully taxable, but commuted gets some exemption. So for you, problem starts here. It's good that commuted gets exemption, but you have to learn that exemption. So there are two possibilities. There are two possibilities. What possibilities? It is received by government employee. Which pension? Commuted. So for uncommuted, I don't have to do government, non-government. For commuted, I am doing government, non-government. Remember that. This is importance of flow chart. First, I did not do government, non-government. First, I did uncommuted, commuted. Understood? Then commuted has got two parts. Government and other than government. For government, congratulations. Fully exempt. Problem is where? Problem is where? Problem is where? Other than government employee. Now there are two possibilities. What two possibilities? You are receiving only the pension as benefit. Means you are not receiving gratuity. Then your exemption is on a higher side. If you are not receiving gratuity, exemption is on a higher side. Higher means what? Half. And if you are receiving gratuity, then exemption is on a lower side. Government says you don't only get pension, you also get gratuity. So exemption is on a lower side. So it is one third. Of course, now one third is less na than half. That's it. So simple. But one third of what? Half of what? Half of that pension, half of such pension had you commuted 100%. What is this? Okay, listen carefully. Originally in my example, how much pension I am getting? 15,000. It's not necessary that I will have to commute full 15,000. I may need a small amount. So what I will do? I will commute. I will commute one third. How much I have commuted? One third means what? Very technical. I will commute one third means I will forego my right to receive one third amount. Means in future I will not receive full 15,000. I will receive one third less. So I will not receive 5,000 in future per month. So how much will I continue getting per month? 10,000. So this 10,000 now 10,000 remains as my uncommuted pension. And I have given away how much of my pension? 5,000. Friends, against this 5,000 per month, I will receive a huge amount, lump sum. That is called as uncommuted, that is called as commuted pension. How much did I commute? 5,000. Means how much did I commute? One third. Suppose I commuted one third and I got 5 lakh rupees. So if I would have commuted full, then how much I would have got? So for one third, I have got 5 lakhs. So if I would have commuted full amount, I would have got how much? 15 lakhs. Exactly. So half and one third is of that 15 lakhs. Read what is the point? Half of what? Half of what? And one third of what? Of such pension had he commuted what? 100%. This much gets exempted. This is exemption of pension. Don't take tension at all. See the question. Then go ahead and do it. First see the question. If you don't want to see this question, see this question. But see the question. You can give reference of this question. Okay, pay attention. No, this is a big question. Better that you first do our basic question only. Because this will have gratuity, pension, HR, RPF combined. So don't go in that issue right now. Do this basic question only. Take photo of this. Third thing that you have to do as homework. Writing of this question. Keep your calcies ready and keep yourself ready. Please keep yourself ready. This is last thing that we are doing for the day. No new concept now. New question is possible, but no new concept. Pay attention. When did I retire in this question? Huh? First, read properly, read. I told you, you keep yourself ready. When did I retire? 1st October 23. Do you agree that my pension will start from 1st October 23? Yes or no? You have to keep on answering me step by step. Yes or no? My pension will start from 1st October. What is the pension per month? So what is to be, this is called as, very good. This is called as uncommuted. What else? It is called as uncommuted. On 1st Feb 24, forget 1st Feb 24, from when did pension start? 1st October. So October, November, December, Jan. For 4 months, he continued receiving uncommuted pension of how much? 5,000 per month. So it will become fully taxable. Who are you doesn't matter. Uncommuted is always fully taxable. Afterwards, you have to remind me that you have to do in provisions and concepts pensions table. You have not done that. Okay. Listen carefully now. He commuted 60% of pension. He commuted 60. Means uncommuted is how much? 40. 40 of what? 5,000. 5,000 into 40%. 2,000 per month. For how many more months in this financial year? Feb and March. Who said it can go out of the class? Financial year will end on 31st March, no? Financial year will end on 31st March 2024. So I retired on October, na? So October, November, December, Jan, Feb, March. I have to account only for 6 months. Out of 6, 4 months you got 5,000 per month. Remaining is only 2 months. For 2 months you have got uh, how much? 5,000 into 40%, 2,000 per month into 2 months. 4,000. So 20,000 plus 4,000. 24,000 is your dash pension, uncommuted pension. Whether you are government employee, non-government employee, receiving gratuity, not receiving gratuity does not make difference. This 24,000 is always fully taxable. But simple. Uncommuted pension part done. Come to commuted now. Now come to commuted. How much have you commuted? 60%. No, 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 no. That 3,000 is there now. It has got zero relevance because you will never receive this 3,000. How much you have received in lieu of that 3,000? Instead of receiving that 3,000 per month, you have received in lump sum 3 lakhs. So 3 lakh is called as commuted pension. Friends, we are almost done with the question. We have got 3 lakhs when we commuted 60%. If we would have commuted 100, we would have got how much? So, so for 3 lakh 60%, 3 lakh is equal to 60. So 100 is how much? 3 lakh into 100 divided by 60. How much? 5 lakhs. Clear? Question is solved. If you are a government employee, this 3 lakh is fully exempt because commuted pension is fully exempt for government employee. If you are other than government employee and not receiving gratuity, then half is exempt. Half of 5 lakhs, 2.5 lakh is exempt. Out of how much you have received? How much you have received? Out of 3 lakhs, 2.5 lakh is exempt. That 5 lakhs we calculated, na? That is only base for calculating exemption. How much is received by you? Out of 3 lakhs, how much is exempt? Half. Half of such pension had you commuted 100%. Not half of 3 lakhs. Half of 5 lakhs. That is 2.5 lakhs. So what is taxable? 50,000. Commuted 50,000 is taxable. Uncommuted 24 is taxable. So total 74. And if you are receiving gratuity also, then how much is exempt? One third. One third of that 5 lakh. What is one third of 5 lakhs? Sure. Exempt that 166, 667. Exempt that from 3 lakhs. Check. See, you got 24. When you're government, pay attention. When you're government, don't talk amongst yourself. Needless to say, if you miss out here, gone. Government employee, uncommuted pension, how much is taxable? You all calculated the figure 3 lakhs. Government employee commuted, how much is exempt? Congratulations, fully exempt. Taxable of commuted, nil. Uncommuted taxable, 24. Total taxable, 24. Government is clear? Say yes. Of course, government is clear. Private sector receiving gratuity, how much is exempt? Receiving gratuity, one third. So one third of what? One third of 5 lakhs. So as you calculated, 166, 667 is exempt from 3 lakhs. So 133, 333 is taxable. And needless to say, uncommuted figure remains same. So total taxable pension 157, 333. And tell me, if you are Not receiving gratuity, then how much is exempt? Half. Half of what? 5 lakh, which is 2.5 lakhs. 2.5 lakhs will be exempt from 3 lakhs. So taxable commuted pension is 50,000. Uncommuted is, as discussed, 24. So total taxable pension is 74. So simple. If you understand. And you will keep struggling if you don't understand. There is no midway. Either you understand or don't understand. So I hope you have taken photo of the question. Now first what you do is do this. Where it is, sorry. Do this first. Have you done this? Nothing you have done. So start doing. I will not speak now. I will try to keep quiet so that you get chance of focusing. In your provisions and concepts notebook, divide pension in two parts, uncommuted and commuted. Uncommuted means, first explain yourself the wording of meaning of uncommuted. Uncommuted means received on per month basis. Example, this 15,000 per month is example, huh? Example, 15,000 per month. So it is always fully taxable for all employees. And commuted means received in lump sum. Example for that, employee received 5 lakh as commuted pension as he commuted one third of his pension. Once you complete it, let me know. So in my example, have you done till this point? In my example, 15,000 per month was total pension per month, out of which, according to this point, according to this example, I have commuted one third and in lieu of that got 5 lakh, and my uncommuted continues to be 10,000 per month, according to this example. Anyways, if you don't understand this example, we have that example. Almost last thing for the day. Shall I scroll down? Now see what happens with commuted pension. Divide in two parts. What two parts? Received by government employee, received by any other employee. Government employee fully exempt. Shall I scroll down? Received by any other employee. Two parts. If he receives gratuity, what you want? This is written only commuted pension. And avos are done. Two parts when received by any other employee, he is receiving gratuity, he is not receiving gratuity. If he receives gratuity, then government says he is getting another benefit, gratuity also. So let's give him less exemption. So exemption will be 1/3. And if he is not receiving gratuity, then government says let's give him more exemption. So they give him half. But whatever it is, 1/3 or half, it is of such pension had he commuted 100%. This 1/3 and half, whatever we discussed, these are the exemptions. Have you written that these are exemptions? These are exemptions of commuted pension. I think now start solving the sum. Start solving the sum. All my online students have taken the screenshot slash pause the video and completed the question, and all of you have taken photo. Shall I now go ahead and do computation of taxable pension for AY 24-25 relevant to PY 23-24? In three situations we have to do. First situation, he is a government employee. Friends, first situation is that he is a government employee. All of you, he is a government employee. What happens if he is a government employee? Please, uncommuted is fully taxable always. Commuted is fully exempt. What do you want, heading? Always uncommuted is fully taxable. Please calculate uncommuted figures. I retired on 1st October 23 and till 31st Jan I kept on receiving 5,000 per month. So October, November, December, Jan, all 4 months I got 5,000 per month. So 20,000. Feb and March, these 2 months I got Only 40% because 60% I have commuted. 40 has remained uncommuted. Understand and do. So how much is total uncommuted? So friends, total uncommuted is 24,000. That 24,000 is taxable even if you are government employee. What should be B point? Tell me what should be B point? Huh? Sorry? We have done commuted, uncommuted part. What should be B part? Sorry? Commuted pension. Who are you? Government employee. It will become fully exempt. Complete it. Once you complete it, let me know by saying D in the chat window. Where are you now? Have you completed for government employee? The total taxable pension 24,000. Tell me yes or no. Okay. What will change for private sector employee? Not receiving gratuity. Which part of the answer will change? Only commuted part will change. Can I scroll down? Chalo. He is a private sector employee and receiving gratuity. Please again don't show the working of uncommuted part. Just show computed above 24,000. Commuted part, please show the working. Please put asterisk on 5 lakh. We will show how we got 5 lakh. Once you complete this, say D in the chat window. You must have done systematically 2 columns, means particulars and 2 amount columns. A uncommuted pension, fully taxable as computed above 24,000. Commuted pension received 3 lakhs, less exempted 1/3 of 5 lakh, that is 166,667. So taxable commuted pension 3 lakh minus 166,667. So 133,333. You must have taken total of 24,000 and 133,333. So finally you must have got total taxable pension 157 333. So simple. Those who have done this B part, do C part also. You know what will change in C part. I think we should go ahead now. Please show how you got 5 lakhs. When you commuted 60%, you got 3 lakhs. So when you would have, if you would have commuted 100%, you would have got how much? So 3 lakh into 100 upon 60. And please show C. He is private sector employee and not receiving gratuity. This all is going on in your practice notebook. You have maintained index for both the notebooks. We are almost about to complete your third day of income tax. Here directly exempt will be 2.5 lakhs because half of 5 lakhs because you are not receiving gratuity. So exemption figure of commuted pension goes up. So 50,000 only will be taxable from commuted part. From uncommuted part as usual 24,000. So total taxable pension 74,000. As you complete it, you can close the notebook. That's it for today's session. Thank you so much. See you in next session. In next session, discussion will continue on salaries and lot of practice. Thank you.